On this segment of the Market Day Report, let's go right straight to Mr. Todd Horowitz with Bubba Trading to get his thoughts on all of these wild gyrations that we're seeing in the markets. A lot of volatility, Todd. Now, for our radio audience, you're already shaking your head yes. Get into all of this volatility and what it means for the grains and why. What's behind all of this?
John, today's the day we got to buckle up. You know, here's what's behind it all. The higher prices go, the more volatility, the more trading action that the market attracts. We know that there are buyers in the grains. You can see it every day because the overall trends are much higher. So what happens when you get to such extreme prices, you get these big early rallies, they typically get sold into, and I wouldn't be surprised if we ended up, you know, a lot lower here or a higher on the day. And that's the kind of action you get. As volatility picks up, you start to see wilder price swings, which is what we're seeing. And I think that, you know, you're going to see this backwardation we're in right now. You know, there is a little bit of fear that we're going to run short early here in some of these delivery months. So you're seeing higher prices up front, and in the back we go into lower prices, which I think that's going to also reverse, because I think you're going to start to see some money flow into December and some of the other months behind us. So I think it's a full steam ahead, but it will be volatile. Okay,
you were talking about how much more headroom is there in these markets then when we see this kind of volatility? Is there just all the rules are out the window? Is everything off the board? Is there anything technical that you watch? What gives you indications?
Well, we watch the trend, and the trend is up. Okay, and of course, the limit to the upside, there is none. Basically, we know at some point, you know, the old saying in the commodity world is just high prices will cure high prices, but we don't know what's high yet. Okay, you know, we could go back into, you know, $17, $18, $19 beans, $8, $9, $10 corn. Nobody knows where the tops are. You know, as the Fed continues to mask the inflation with by adding to the money supply, prices are out the window for right now. We could continue to go higher and should continue to go higher.
Okay. Well, speaking of those prices, let's look at the board right now and see where those prices are at. And our first stop is the corn market. July's up 6 1/4, but new crop December is down 2.5 cents on our futures provided by Bar Chart. In the soybean market, July down 13 3/4 at 15.20.5, and the November is down 5.5 cents. For the wheat market, Chicago is down 14 on the July contract, 7.20 3/4. Now we're on the low of the session so far. July Kansas City wheat down 8 3/4 at 6.94 3/4, only 1/4 of a penny off of the low. July Minneapolis wheat down 7 at 7.56 3/4. Now that's still a little ways off of the low so far, but over in the new crop December contract of cotton, we're down 25 points at 84.81. And the low on this contract is 84.64 so far. We're just about in the middle of the range at this point. And we'll be back in just a moment and see what's going on in the livestock trade and discuss that with Todd right after this. Let's go back over here and visit with Todd Horowitz at Bubba Trading. Todd, is there as much a level of volatility in the livestock as there is in the grains right now?
Well, John, I think in cattle, probably not so much right now. Hogs, yes. Now, you know, cattle is still a little bit weak in here, and it's lower today. Now, it hasn't made a couple of attempts to rally, but it looks like it's weakening again now as you and I are speaking. But, I mean, there will be volatility, and I think we're going to see higher prices. Now, we're still slightly negative here on the cattle markets, but, I mean, that'll be temporary. Those trends will change. And I think as the economy opens, we get closer to summer and everybody realizes, oh my God, it's Memorial Day already. I think we'll start to see a rise in prices in cattle as well. And hogs, they're pretty wild. I mean, they've lost about half of their gains. They were up almost limit this morning at one point and have cut down about half of those gains. I know a story just hit Reuters. I haven't seen it yet, but I know it has something to do with it. But overall, they could be very volatile. The higher price gets, the more volatile they're going to be.
Okay, how does inflation fit into this picture then, Todd?
Well, we don't have inflation. That's the real problem, John, is nobody will identify the fact that we are seeing real inflation. Unfortunately, the models that are used by the Federal Reserve don't indicate inflation because they don't count food or energy, which obviously in a service economy, those are two of our main expenses. So, it's hard to say, but I assure you, at the grocery store, we're still paying more money no matter where cattle prices are.
What about the fund managers then? Are they still watching all of these commodities as a safe haven against inflation?
Well, I think it's a safe haven, but it's also, the fund traders are often a trend traders, and when they start to see real action, they jump aboard, and I think that is what will help propel these markets significantly higher as well. I mean, I think there's a lot of room. And I said, I just want to be clear, we're negative at the moment, but I would love to be a buyer, and we'll look, as we sell off a little bit, I will look to be a buyer of cattle as well. And I do think there's a room for a very, very big rally, very much like we saw in the grain markets over the last 6 or 7 months.
Wow. Okay. Todd, thank you so much. Hope you have a good day, and we'll talk to you again on Wednesday. Todd Horowitz with Bubba Trading on our futures provided to us by Bar Chart. We are down 60 cents now at 115.97 on that June live cattle contract. August is down 15. But that October is actually up 20. Those far out deferred contracts are higher. For the feeder cattle market, now we've flipped the deferred contracts on this particular market. May is the only one that's lower. It's down 27 at 133.32. But August is up 25, September's up 37, and October is up 47 cents. And the hogs, as Todd mentioned, we're well off of our earlier highs today. June lean hogs up 120 at 110.92. Got as high as 113.17. July is up 155, and the August is up 142. Beef cutouts here at midday, higher. Choice up $1.91, and the selects up 96 cents. And the pork cutouts are higher as well, with the carcasses up 183, loins up 15 cents, hams up 19, and the bellies up just 9 pennies at 154.77. Tammy, back to you.